What's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to our budget community portfolio series for the month of February 2024, where every single month I deposit $100 into a brand new portfolio that we created from scratch just a few months ago. And then I use that money to invest in stocks. Now, I also do an update video for this on YouTube every single month, but if you want to stay completely up to date with every single transaction and trade that I make in the portfolio so that you can follow along, well, I post everything on our community Discord as soon as it happens, which you can get access to by either supporting me here on YouTube through the join button or over on Patreon. Link is in the description. And by the way, thank you to everyone that does support me. It means a lot to me because I really couldn't do this without you. So thank you for that support. Now, for this portfolio, we of course use SoFi, and I went ahead and took some updated screenshots, and I also created some custom charts to show you exactly how we're progressing on it so far. So let's go ahead and jump straight into this portfolio. All right, so overall, January was actually a pretty good month for us with about a 2.5% rise in performance. Now, we've had this account for 3 months and have deposited $300 in total, which leaves us up about 7% overall with a total balance of about $320. And actually, this includes our cash balance as well, which is obviously stagnant, but when you exclude that, well, our actual stock investments are up more at around 13% in total. Speaking of cash, though, our cash balance currently sits at $140, which is pretty high compared to how much we've invested in stocks so far at $180. So that's a cash ratio of about 44%. But believe it or not, the previous month was actually even higher. So we've actually been doing a pretty good job of lowering that cash balance throughout really January and using it to purchase some great stocks. So let's go ahead and run through those purchases right now. Well, we spent $60 in total in January, with Google being the largest purchase at $15, which I am very happy about because Google is really one of my favorite overall stocks in the entire market right now, probably my favorite. So I want to get that position up as large as possible. And then we also purchased $10 of Tyson Foods, which is a beaten down leader in the giant meats market with also a great dividend. Then we spent $5 a piece on all of these remaining stocks, which includes another 3 beaten down dividend stocks in Verizon, Bristol Myers Squibb, and Pfizer. We also bought some more Alibaba, which is a beaten down Chinese giant. We bought some Nvidia, which was actually a result of a recent poll we did, where I asked you guys which new AI stock should be added to the portfolio, artificial intelligence stock. And about 2,000 of you voted, so it was a big survey there, with Nvidia winning at over 40% of the votes. Now, Tesla was actually a pretty close second, though, and they've, of course, been falling a lot recently, too, so I may still want to add that one in the future. And actually, Baidu was really the one that I was kind of hoping would win because I've been wanting to add that one as well. So maybe we should do another poll in the not too distant future where I replace Nvidia maybe with another artificial intelligence stock option. Let me know what you think about that. Let me know if there's any AI stock that you think could replace Nvidia in an updated poll to see which AI stock we could add to it as well. But anyway, we also added Palantir, which was also a poll survey winner where 44% of you guys voted for it, followed by PayPal, Neo, Fiverr, and GM. Which, by the way, I'll just address this right now because I actually got some angry comments for that poll because I called them higher risk stocks, and a lot of you felt that Palantir and PayPal specifically really shouldn't be considered higher risk or speculative in any way. So I do apologize for that, and I also do agree that they're not very speculative anymore, but all I was really trying to do with that poll was to group together some stocks that I wanted to add to the portfolio, but I felt that they were just a little riskier than maybe some of the other larger, more kind of stable stocks that we would typically consider core investments. So it's not that I was trying to like throw shade on any of these stocks. I actually like these stocks. I wanted to add these stocks, but I just felt like some of these were seeing some big stock declines, or maybe had a younger business, or were having some struggles financially. So I kind of just grouped them all together and called them higher risk just for the sake of making a poll survey. But in reality, I actually liked all of these and I wasn't trying to make them seem bad or with a negative kind of tone for it. But I'll try to be more careful in the future with how I word things. Anyway, just to finish up here, I also added a little more SoFi stock as well, which I just love as a fintech, and I've been having a blast using their platform for this portfolio as well. Which, again, if you guys haven't tried SoFi yet, you might want to consider using my affiliate link down in the description, because it actually gives you some free stock just for signing up, and all of that is free, and it also helps me out too, so thank you to anyone that uses that. But with all of that said, let's go ahead and take a look now at the portfolio in its entirety, and let's see how we're doing on each individual stock position so far. Then I'll finish up with what I plan to do here in the next month going into February. Okay, so here's a screenshot of all the holdings. The ones in green are positive and the ones in red are negative, but I actually created some custom charts for you that it makes all of this easier to understand. So let's just kind of go through some of these. Well, here's a pie chart with all of the holdings and the percent that each makes up of the portfolio. But just keep in mind that this is really still a very young portfolio here, so everything is going to look a little wacky at first. But once we build out these positions out much larger, it should all start to kind of look much better structured, I should say. All right, well, Google and Amazon so far are our two largest holdings, which I am very happy about because they're two of my favorite, most dependable stocks in the market. I have a lot of conviction in them. I really believe in them long term. But I do think that Pfizer is a little high here at number 3. I'd much rather switch that with something safer, like maybe Microsoft or even Medtronic. So I may want to look into buying more of those stocks in the coming weeks and months. But besides that, everything else looks pretty good. I think it'll continue to shape up well over time. As far as which of these stocks I'm actually up or down on by percentage, well, SoFi is currently our best performer at over 20% gains, with most other stocks in the portfolio up double digits as well, which is really strong performance just kind of across the board. And to be honest, that's kind of making it a little harder to buy more of these stocks because of those higher prices. But we do still have some smaller gains and even some negative stocks with Palantir, Tyson, and a couple biotechs and Alibaba. So maybe we can add to some of those as well and kind of get a low cost basis while they're still trading kind of lower, at least in relation to the other stocks in this portfolio. But just to finish up here, I ended the month with another $100 deposit for the month of February, which brought our account balance up to around $420. It went up a little bit too as I was making this video, but that leaves us now with a whopping $240 of cash to spend on stocks, with a cash ratio of 57%. So yeah, that's definitely way too high there. We're gonna have plenty of cash here to spend in February, so it will be another active month for us. But that is definitely fine with me. I love being active in the market. I love to be constantly buying stocks. So that just means that we'll be able to build up our positions larger throughout February. We've got plenty of cash reserves there to spend. Now, speaking of that, I think my goals for February will include a few different tasks. One will be to find a high quality stock to make our third largest, because right now that's Pfizer, which is kind of okay. I mean, they are the biggest pharmaceutical company in the world, so it's not a bad stock to invest in my opinion. But I still think that maybe we can do a little better. We can get something that's a little less volatile or controversial. So maybe a little bit of a safer stock there. I think something like Microsoft would be a great fit, or even something like Medtronic, maybe even Tesla. I mean, there are some different options out there, but I'm not too sure which one would be the best fit to make our third largest holding. So I'm actually going to ask you guys for help on this one. So right now in our top three stocks, we've got Google, Amazon, and Pfizer. Kind of looking to replace Pfizer with something else. What do you think should take its place? Please leave a comment down below if you have some time. And you know what? I'll even feature some comments in next month's video. So if you could let me know what stock you think should be that number 3 largest and a couple reasons why, and I may feature your comment in next month's video. Sound good? Okay, so I love to do that, by the way. I love to be interacting with you guys and getting more feedback and having you kind of have some influence over this portfolio too. I like it to be like a community portfolio where we all kind of have influence over it. All right, now besides that, I think that during the month of February, we could also add a bank stock, because as I was looking through all of this, I noticed that we don't have any bank stocks. I mean, I know we have SoFi, it's kind of a bank, but really I think of them as more of just a fintech. So I think we could add a big bank here, and you know what? I'll probably just do a poll for that. So I'm thinking I'll do a poll survey for that, add some banks there, see which ones you guys like, and maybe we'll add one during February. And then another thing that I feel we can focus on here in February is to keep adding to our dividend stocks, because those are always going to be a great way of building up a new portfolio long term, especially when you're on a tight budget. Right now, we're only depositing $100 a month, but our cash reserves are pretty high. And so if we can add to that some recurring payments every quarter from dividends, well, I think that's going to be a huge help in building up our positions larger over time. So I definitely feel that dividends is something that we need to focus very heavily on and make sure that we're taking advantage of. And maybe in the future, I'll even consider increasing our monthly budget too. But I think for now, we should just kind of leave it at where it's at, because the whole point of this series is really to show that anyone can be successful in the stock market and also have a ton of fun with it too, even on a tiny little budget like this. The only thing that's holding you back, I believe, is really yourself. And that's what I'm kind of trying to illustrate here on this series, that it can be done even on a small budget. Hopefully I'm doing a good job of that, but you guys can let me know. But anyway, hope you're enjoying the series as it is. Anyway, the last thing I want to mention is that in February, I will just kind of in general be looking to buy wherever I see opportunities, which, by the way, this week is going to be huge for earnings. I think like most of the stocks that we own are going to be reporting this week. So hopefully some of them actually report some bad numbers and go down in price. Fingers crossed on that, because I would love to get some cheaper prices. And I know that sounds a little weird to be like hoping that my stock prices actually go down, but that's something that I feel people, at least some people, are just kind of like misinformed on. Like those that really freak out or they stress out a lot whenever their stocks are going down. I'm like, dude, that's a good thing. If you really like a company and you believe in them long term and you want to invest in them, they should be hoping for the lowest prices possible. And to this day, I mean, I still get a comment or two once in a while of someone trying to like mock me for one of my stocks going down. And I'm just like, dude, I want that stock price to go down. Like, I actually get sad when a stock price is going up, because I end up just regretting that I didn't buy more of it. But if I really like a company and I bought it at this price and now it's even lower at this price, well, obviously I would like that. I want to be able to buy more of it. And like I said before, I like being active in the stock market. So I like to be actively buying. So I want my stock prices to actually go down. Whenever I'm looking at my portfolio on my phone and I see like stocks are down, I'm like, oh yes, like that's such a good feeling, because I know I can go in and buy it at even cheaper prices. But maybe that's just me. I know it's not. I know that a lot of you share that opinion because obviously you watch my videos, but I know that that's something that we probably, most of us, agree on. But anyway, just wanted to share that because this month is going to have earnings, which means volatility in the market. Hopefully some of these stocks drop and I'll be there to, swoop up any of the ones that I like. But anyway, I'm starting to ramble a little bit, so I'm going to end the video here. I hope that you enjoyed it. I hope you're enjoying the series. Leave any comments, any feedback down below. And yeah, I think that's about it. But thanks again for stopping by, my friends. Thank you for all your support. It means so much to me. I hope you're all doing well. Take care, everybody. I'll see you in the next one. Bye-bye.